Testing. Hey guys. It's been a while since I've been on this live stream. Hopefully, I'm doing this right and working. Let me just get things set up. But earnings just came out for Nvidia. We're just doing a quick show on another show. So now let me just pull everything up so we can get this show started. I hope everybody's having a good week. What's going on, Q? What's going on, Rochelle? Let me just kind of set this stuff up. Let's see, let me just get this up and running. What's going on? Hope everybody's having good. Crucially, I lost so much money with Nvidia. That's crazy. I mean, I do want to say with Nvidia, it's been a pretty crazy ride, especially if you kind of purchased in the peak. But long term for Nvidia, I'm still super bullish. I mean, definitely sucks if one has invested in the short term, like in the past year or so. But in the long term, things I would say are still pretty strong for Nvidia. So let me take a closer look at how stock is reacting right now. The stock is down about 3%. We're gonna see a few things. So their earnings call starts at 5, I believe. Let me just go back to their webcast. It's at 5. Yep, it's at 5. So at the moment, let me just sign up real quick, get that started, and we can take a closer look at their revenue before earnings starts back up. So let's see what we have here. So let me just get things set up real quick, guys. It's been a while since I've done these live streams, so gotta get back on my groove. Earnings for Nvidia, I had to, I had to. Some of you guys were asking for it. Let me just register as guest for their live stream. I don't know why they make it so difficult to get on the live stream for their earnings. It should be super easy, right? Webcast link. It actually says it's going to start in 44 seconds, which they actually, audience may arrive 15 minutes. Okay. So let's take a closer look. All right. So let's see. Let's take a closer look at earnings right now. So unfortunately, revenue, as we're going to see, was $6.7 billion, right? This was down 19% quarter over quarter, up 3% year over year. Huge decline. Luckily for us, I want to say as investors, Nvidia kind of came out earlier last week or 2 weeks ago telling us that, hey, results are going to be bad. They do mention a good reason for the results decline results was the decline in the gaming segment. They also did tell us that, hey, the data center market, even though it's still growing, and we're going to see, it kind of saw a bit of a slowdown this recent quarter. We can see revenue was definitely not great, down 19% quarter over quarter, up 3% year over year. Another big impact was their gross margins. Gross margins were down 22 points quarter over quarter and 21 points year over year. Again, they did kind of give us a little bit of insight in their preliminary results due to some charges for their inventory process or their manufacturing process, most likely to TSMC. This, at the end of the day, affected their earnings per share. If we take a closer look at non-GAAP, 51 cents, down 63% quarter over quarter, and down 51% year over year. I see you mentioned we should really consider these earnings as a turning point towards data center. We all know that the data center business will be dominating in the future. I agree for sure. I do believe that even though we're going to see the gaming market here, if we take a closer look, the gaming market was down big. It was down a nice amount. I do believe they mention it. Gaming revenue was down 33% from a year ago and down 44% sequentially, mainly due to lower sell-in products. Obviously, crypto miners and all that affected a bit of a slowdown. I do want to say, with the consumer market kind of seeing a bit of a slowdown and the cyclicality in the consumer world, this was bound to happen. But I do believe in the long terms, the gaming market is going to pick up. Their 40th or 4,000 generation of GPU, I believe, is going to sell pretty good, especially if there is a huge generation leap in performance. We've seen most gamers are still sitting in the GTX era, which is the 1000 series, and very little are in the 2000 and in the 3000 era. So if there is a huge performance increase in the new generation of GPU, I believe the gaming market will continue to go up. What's going on, Jita? Haha, I lost 2 and I don't want to sell. Hoping once it goes back to where it was, I would sell, but nothing is happening. So Gita, I do want to say for the semiconductor industry, right, and for the overall Nvidia in general, it's definitely a very volatile stock. But again, there's numerous tailwinds that this company can overall grow. I mean, the CPU Grace is going to be based on an ARM architecture. One of the biggest weakness right now in data centers is power performance, right? Power efficiency. And the great thing about ARM CPUs is they tend to be a little bit more power efficient. So that's definitely going to open up a nice market, especially as the biggest competitors in Intel and AMD, their kind of server CPUs are still based in the x86 architecture. Which are a little bit more power hungry. So there's definitely going to be a market for Nvidia's CPU Grace. We're also going to see just the automotive market in general, their Orin solutions, and again, the data center solutions, not only in graphics cards, they have huge market opportunity with their network switches and their kind of super chips that they are kind of developing, especially with the performance due to their NVLink, which allows chips to kind of communicate at a faster rate. Logan, I feel like everyone bought the GTX, then the crypto boom prevented people from upgrading to the 3rd series. Now that it's settled, people are holding out for the 4th generation or the 3rd generation cell. Logan, I agree with you. For example, myself, I'm currently looking for a GPU upgrade. I don't need one that bad. So for me, I'm personally waiting for the 4th generation instead of kind of picking up one right now or just wait for a bigger cell. And I do believe many people are in that same kind of waiting like I am, that hey, we know 4th generation should be coming out, or the 4000 generation should be coming out soon. Maybe it's better to just wait off, or if not, we'll probably get even better sales on the 3000 series, right? So Logan, I agree with you that it happened. Jose, I'm a little bit afraid of Ethereum being converted to proof of stake. Do you think Nvidia will lose permanently its revenue from ETH mining? I do believe from the crypto mining is going to be a lot weaker than normally, especially due to that. Luckily, I don't believe it's going to be detrimental for the company. Again, I do believe the gaming market, especially if they continue to innovate, if they continue to grow stronger in forms of performance, then the gaming market will do well. Maybe not in the short term of things, because you kind of have numerous things hitting it at the same time. You have that kind of crypto mining, you have the kind of the consumer market, you kind of also see the next generation coming up in the next few months. So you have everybody kind of waiting off at once, that I do believe is causing this huge decline in gaming. I think it's the perfect storm all happening at once. So let's see what else we can see. Another impressive one was the automotive market. Even though the automotive market is the smallest out of all of them, it did see a nice year-over-year and quarter-over-quarter growth. And I do believe this is gonna continue. The automotive market, as we all know, is still kind of in a huge. They can't produce as many cars as they want to, but I do believe as that increases, the automotive market is gonna become an important play for Nvidia. I do believe in the upcoming quarters, in the next 2 or 3, in less than a year, I would say trailing 12 months of automotive revenue will finally pass a $1 billion run rate. Where right now it's probably closer to like a 800 million or maybe even 700 million run rate. I do believe in about a year, this is going to be about at least a 1 billion trailing 12 months run rate. So let's see what else they mentioned. They tell us, hey, data center revenue was somewhat short of expectations and was impacted by supply disruption. Supply disruption, an important thing to note is that, hey, data centers are not just a CPU and a GPU. There are a lot of other products. So if there is a delay in the product, maybe let's just say some form of NIC card or networking card, right? Companies are not going to buy everything else. They'll rather just wait off once all the kind of products are available to purchase. And I do believe that's why supply chain disruption is affecting the data center market. Obviously, they have to take a closer look at the crypto market. They have obviously limited visibility to this, but it's definitely impacting their kind of contribution in the gaming market. Let's see what they have about the data center. The data center revenue was up 61% year over year, up 1% sequentially. Sequential sales to North America hyperscale and cloud computing customers increase. They did mention this in the preliminary results that, hey, they're still seeing huge growth opportunity in North America, but they are seeing lower sales in China hyperscale customers at the moment. Obviously, I personally prefer a lot more strength in the North America market opposed to that. Dr. D, I like your analytic work. This Nvidia's kitchen sinking today reminded you of what happened back in January of 2019 when it bottomed last time. So I mean, yeah, the kind of crypto boom has happened before, right? And it kind of bottomed. I do want to say today, right, the stock price is down 2.6%, and this is weird, but I kind of consider this somewhat where we're kind of at the bottom of valuation. Few reasons. First, horrible revenue quarter, and we kind of saw that with the preliminary results. But the company also gave us guidance, and their guidance, their kind of guidance is pretty low. Revenue is expected to be $5.9 billion in the next quarter. They expect decline to be partially offset by sequential growth in data center and automotive, but they're still seeing a nice decrease in gaming and professional. So they're giving us the third quarter outlook to be a lot weaker than this quarter, and the stock price has only dropped about 2.5%. I do believe this tells me that, hey, the market to some extent had already kind of priced in, has kind of already priced in the negativity going in for Nvidia. Because I gotta be honest, that quarter three guidance is looking very, very weak. So again, they mentioned numerous reasons. Mainly the gaming and professional are expected to decline sequentially, but they still expect a nice kind of offset growth in the data center and in the automotive market. What's going on, Fraser? What is the PE ratio going forward for Nvidia? To be honest, I'm not sure of that. Maybe we can take a closer look at Y charts later on to mention that. Again, another thing is capital expenditures are going to increase mainly due to principal payments on property and equipment. They are definitely kind of focusing a lot of money on getting those kind of supply chain lines right now, because they are releasing new products in the upcoming quarter. The Hopper GPU for data centers, then the overall GPU for the consumer market, the kind of next generation Orin chips for the automotive market, and obviously Grace, the CPU, and then obviously there are kind of networking solutions that they can grab from Mellanox. So let's see, what else can we kind of mention. Company still has a nice amount of cash. Cash and cash equivalents are roughly $17 billion. It was down from a year ago and down from a quarter ago, but this is a company that has returned about $3.4 billion this quarter alone to shareholders in forms of repurchase and cash dividends. So they are returning to shareholders. That dividend is pretty weak, but they are buying back shares. I recently did a video on Nvidia, and I did see that, hey, their share dilution hasn't really increased much for the past 3 years. In the past 3 years, share dilutions have really only increased 2% compared to where they were 3 years ago. And I think that's pretty impressive. Normally in these kind of big tech companies, you see kind of a nice increase in dilutions due to kind of share compensation to employees. And for Nvidia, that is not the case. Let's see what else we can see from this company. Sorry if I'm scrolling and it might kind of give you a headache. Interest income. So net loss. Another thing, it's okay. This is pretty interesting. Net loss from non-affiliate investments was $7 million due to mark-to-market of publicly traded. So some of their investments in kind of saw a bit of a decrease, just like everybody's portfolio. So something to keep in mind of. See, yeah, here they mentioned gain and loss from non-affiliate investments was down about $7 million this quarter. Let me just take a closer look. Anything here? Stock-based compensation still pretty high, 611, but I mentioned it's not that high in forms of dilution. Anything else that I want to see before we take a closer look at their earnings call? So there was a 1.2 billion charge for inventory and related reserves based on revised expectations, primarily relating to data center and gaming. The charge consists of approximately 507 million for inventory on hand and approximately 650 million for inventory purchase obligations in excess of their current demand projection, and cancellations and underutilization penalties. So again, this is a company. This is a company that obviously during the shortage of chips, they went to kind of TSM and said, "Hey, we need a lot of inventory because we believe we're gonna need a lot of chips." Obviously, right now that's kind of hurting them. At the moment, it might have been the best move. Now, kind of hindsight 2020, it seems like it wasn't the best move. They were maybe a little bit too aggressive, but they're still profitable at the end of the day and still positive in cash flow from operations. So, Doctor, is Nvidia still one of your top holdings in your portfolio? Yes, I do believe now it's my number one holding again. My number two holding is actually C Limited, and number three is AMD. So, Doctor, Nvidia's, I want to say, closer to 15% of my total portfolio. Luckily, I did get into the stock a lot earlier, so it's one of the few winners I have. For me, no change in outlook. I'm still very bullish for the stock, but Doctor, because it's already a big position of my portfolio, it's not one that I add on to constantly, because I do believe that position sizing to some extent is important. So for that reason, even though I like the stock right now, it's already a big position of my portfolio. So for those reasons alone, I don't add too much into it. But yeah, I do believe it's roughly it's more than 10% of my portfolio, but less than 20%, and it is my number one holding. Doctor, in your honest opinion, who is the better visionary? In CEO, Jensen or Lisa? Interesting. I do want to say, in form of visionary, Jensen. He is the one that, in my opinion, can really see. From what I've seen, he can really kind of look at where this future growth for these products could be, even though they are not in the market right now. I think Lisa Su is better at kind of getting into the current state of mind and the current market, and knows how to focus. I mean, they focus really strong in that Ryzen processor, the first time they released it. And because they focused dramatically in that, it kind of created that growth. So in my opinion, Jensen, bigger visionary. Lisa Su is better at a kind of current outlook and able to kind of pinpoint the strength that it needs right now. Lynn, I have lost a lot due to being invested in Nvidia as well. But also have investment in AMD. I wanted to say, in the long term of things, if I don't need that money in the short term, I wouldn't be worried about Nvidia or AMD at the moment. Obviously, there's kind of competition in this space, but where they're running, especially AMD, I'm going to say these two players, I personally wouldn't be worried if I didn't need the money anytime soon. Doctor, thanks. Okay, yeah, I agree. Both are great. I don't think I can pick one or the other. So let's see if we can kind of get into the earnings call. It's still not on. So once the earnings call starts, I'm gonna put the volume up, and you guys can kind of listen with me. But obviously, this is a commentary, so I'm gonna kind of be talking a little bit over the earnings call. Logan, that on-hand inventory might be a good thing soon. I believe you mentioned AMD or Intel has something like that happening soon from a video you posted last week. Yeah, I do believe that hand-on inventory is very important, especially with the upcoming products that they are releasing soon. Obviously, in the short term, it looks a lot. It's not the best look, but them having those kind of products, especially with the new kind of solutions they're going to be releasing soon, I think it's good for Nvidia in one way or another. So it's been a pretty crazy time for the stocks, right? I mean, just remember, right? It does seem like, I mean, right now it definitely sucks to see our portfolio, but in the long term of things, most money is made through bear markets, and we've seen numerous stocks down 80%. So for me, even though it sucks, I'm constantly investing on a weekly basis, and that gets me excited that I'm able to buy a lot of the companies I owned right now at cheaper prices. Right, so remember, it's good to have this kind of long-term mentality when we get into the investing world, and never invest kind of money we might need in the next year or so. All right, so earnings call is starting. I'm about to put it on. Let me know if you need the volume higher, guys.
NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current
So let me know if you guys
expectations.
can hear it.
These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 24th, 2022, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary.
I agree, Robert. Doctor
On
came
our
in with some
website.
great questions there.
With that, let me turn the call over to Colette.
Thanks, Simona. This was a challenging quarter. Total revenue of $6.7 billion was down 19% sequentially and up 3% year-on-year, below the $8.1 billion outlook we provided on our last earnings call. As we'd indicated in our pre-announcement press release on August 8th, we experienced a shortfall to our expectations, driven primarily by weaker gaming revenue. Today, we will share with you more details on our Q2 results and Q3 outlook. Starting with gaming. Revenue of $2.04 billion was down 44% sequentially and down 33% year-on-year, reflecting challenging market conditions. As discussed in May, we expected a sequential decline in gaming revenue due to softness in Europe related to the war in Ukraine and COVID lockdowns in China.
What's going on, Couch? How's it going?
GPU revenue was sharper than anticipated, driven by both lower units and lower ASPs. Macroeconomic headwinds across the world drove a sudden slowdown in consumer demand. We implemented programs with our gaming channel partners to adjust pricing in the channel and to price position current high-end desktop GPUs as we prepare for a new architecture launch. As noted last quarter, we had expected cryptocurrency mining to make a diminishing contribution to gaming demand. We are unable to accurately quantify the extent to which reduced crypto mining contributed to the decline in gaming demand. While gaming navigates significant short-term macroeconomic challenges, we believe the long-term
Is it me or does the person talking sound like a robot?
Strong. Nvidia RTX has redefined computer graphics and is now supported by almost 300 games and applications. Nvidia's GeForce GPUs are the most coveted brand by gamers, representing 15 of the top 15 most popular GPUs on Steam. Gaming has emerged from the pandemic as an even more popular form of entertainment and social connectivity. Estimated GeForce sell-through is up over 70% since before the pandemic, and peak concurrent users on Steam are also up more than 70% over the same time period. GeForce Now registered members now exceed 20 million. This quarter, we added 80 more titles, including the hugely popular Genshin Impact, bringing our total to over 1,350. Moving to professional visualization. Revenue of $496 million was down 20% sequentially and down 4% from a year ago. A sequential increase in mobile revenue was more than offset by lower desktop revenue, particularly at the high end. As macroeconomic headwinds intensified, enterprise demand slowed, and OEMs worked to reduce inventory. We expect these trends to persist in Q3. While ProViz is undergoing a near-term adjustment after doubling last year, we believe we have expanded the market opportunity over the last couple of years with AI and omniverse workloads. We believe hybrid work is here to stay, and with it, the need for collaborative 3D design enabled by professional graphic workstations, both at home and in the office, as well as in the cloud. In June, we announced a partnership with Siemens to enable the industrial metaverse, an AI-powered digital twins connecting Siemens accelerator platform to NVIDIA Omniverse. This connection opens Siemens
Doctor,
to the
appreciate
vast
the kind words. It means a
ecosystem
lot.
of NVIDIA Omniverse.
You actually gave me
NVIDIA
chills. I
to
appreciate it.
Siemens' ecosystem of the world's largest industries. Earlier this month at SIGGRAPH, the premier computer graphics conference, we announced advancements to several foundational technologies of the metaverse, defined as the 3D version of the internet. First, NVIDIA Omniverse Avatar Cloud Engine will enable businesses to create and deploy assistants and avatars, transforming interactions across a range of industries. We also unveiled 11 new Omniverse connectors, bringing the total number of connectors to the Omniverse USD ecosystem to 112. And finally, we released SDKs for the new field of neurographics, which intertwines AI and graphics to help automate the creation of virtual worlds. Moving to automotive, revenue of $220 million increased 59% sequentially and 45% from the year-ago quarter. Strong growth was driven by auto AI solutions, which include AI cockpit and self-driving revenue, with particular strength in self-driving as new energy vehicle design wins ramp into volume. We believe Q2 was an inflection point for our automotive revenue, as NVIDIA Orin has great momentum. During the quarter, we announced rollout plans of new vehicles from OEM partners, NIO, Li Auto, Jidu, and Human Horizons, as well as Pony AI's line of self-driving trucks and robotaxis, all built on NVIDIA Drive. Looking forward, we expect our $11 billion automotive design win pipeline to translate to continued growth.
That's insane. $11 billion pipeline.
Center. Revenue of $3.81 billion grew 1% sequentially and 61% year-on-year. Although a record, this was somewhat short of our expectations as we were impacted by supply chain disruptions. Revenue from hyperscale customers nearly doubled year-on-year.
I want them to talk a little bit more about those disruptions in the Q&A section.
North America hyperscale and cloud computing customers increased, but were more than offset by lower sales to China hyperscale customers affected by domestic economic conditions. Vertical industries grew both sequentially and year-on-year. Key workloads driving growth include natural language processing, recommender systems, autonomous vehicle fleet data processing and training, and cloud graphics. Let me share a couple customer examples. Pinterest transitioned to 100x larger recommender models by moving its inference from CPUs to NVIDIA GPUs. Its ability to deploy a higher quality model at high throughput and low latency resulted
I like when they show real-life examples like that with Pinterest,
engagement,
for example.
a critical metric for the company, which has over 400 million users and 300 billion images. And Tesla recently upgraded its supercomputer to use over 7,000 A100 GPUs for autopilot training.
Tesla.
From a product perspective, networking led growth this quarter with strong demand from our high-speed Ethernet adapters and design win momentum toward next-generation adapters, including the ConnectX 6 and ConnectX 7. We also see growing interest from cloud service providers for our new Spectrum 4 400 gigabit per second Ethernet networking platform.
That Mellanox acquisition was probably the best thing for NVIDIA.
The upcoming launches of our next generation platforms. The Hopper architecture flagship H100 data center GPU is in production. Grace is our first CPU. Top computer makers, including Dell, HPE, Inspur, Lenovo, and Supermicro, are adopting the new NVIDIA Grace CPU superchip and Grace Hopper superchip to build the next generation of supers. 71% of the systems on the latest top 500 list of the world's fastest supercomputers are powered by NVIDIA,
That's
including
insane.
31
72%.
of 39 new systems. NVIDIA's own Selene supercomputer ranks at number 8 in the top 500 and is the world's fastest enterprise supercomputer. Moreover, 22 of the top 30 systems on the Green 500 list of the most energy-efficient supercomputers are powered by NVIDIA. Significant advances in software technologies are key to our platform performance. In the past 2 years, our A100-based platform has delivered 6x more performance as measured by the MLPerf industry benchmark, largely through new software technologies and optimizations. Last month, we announced an update to the NeMo Megatron framework that can speed up the training
Quick update, stock is down roughly 4% right now.
By up to 30%. Improving a multi-$100 million AI infrastructure by 30% translates to significant value for customers. LLMs are one of the most important neural networks today, ranging in size from tens of billions to over 1 trillion parameters. Learning from text, they can be used for real-time content generation, text summarization, customer service chatbots, and question answering for conversational AI interfaces. Currently, these capabilities are available to early access customers to run on NVIDIA DGX SuperPODs and NVIDIA DGX Foundry, as well as in Microsoft Azure Cloud, with other cloud platforms available soon. We are working with the industry leaders in large language models, a very active and exciting space of AI. Moving to the rest of the P&L.
And for NVIDIA,
GAAP
my
gross
cost basis is
margin
roughly
was
115 with
43.5%,
recent
and
additions.
non-GAAP gross
And for
margin
AMD,
was
is about 35.
45.9%. Gross margin includes $1.22 billion in charges for inventory and related reserves based on revised expectations of future demand, and $122 million for warranty reserves. These charges incurred in the quarter reflect purchase commitments that we made during a time of severe component shortages and our current expectation of ongoing macro uncertainty. We believe our long-term gross margin profile is intact. GAAP operating expenses were up 36% from a year ago and down 32% sequentially, as Q1 included a $1.35 billion acquisition termination charge related to the ARM transaction. Non-GAAP operating expenses were up 38% from a year ago and up 9% sequentially. These increases were driven primarily by employee growth costs, as well as increases in salaries to support our employees during this high inflationary environment, and engineering development of new products coming to market. We have slowed operating expense growth, balancing investments for long-term revenue growth while managing near-term profitability. Our full-year non-GAAP OpEx is expected to grow over 30%. During the first half of fiscal 2023, we returned $5.5 billion to shareholders in the form of share repurchases and cash dividends. We plan to continue share repurchases. We have nearly $12 billion remaining under our authorization through December of 2023. Let me turn to the outlook for the third quarter of fiscal 23. We expect gaming and ProViz revenue to decline sequentially as OEMs and channel partners reduce inventory levels to align with current levels of demand and prepare for our new product generation. We expect that decline to be partially offset by sequential growth in data center and automotive. Revenue is expected to be $5.9 billion, plus or minus 2%.
It still hurts
GAAP
for me to
and
hear that.
non-GAAP gross
5.9
margins
billion.
are expected
Pretty
to be
low.
62.4% and 65%, respectively, plus or minus 50 basis points. GAAP operating expenses are expected to be approximately $2.59 billion. Non-GAAP operating expenses are expected to be approximately $1.82 billion. GAAP and non-GAAP other income and expenses are expected to be an expense of approximately $10 million.
I just want to get to the
excluding
Q&A
gains and
section
losses
already.
on non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 9.5%, plus or minus 1%, excluding any discrete items. Capital expenditures are expected to be approximately $550 to $600 million. Further financial details are included in the CFO commentary and other information available on our IR website. In closing, let me highlight upcoming events for the financial community. We will be attending the Jefferies Conference in Chicago on August 30th and the Goldman Sachs Conference in San Francisco on September 12th. And we will be holding a financial analyst Q&A with management following Jensen's GTC keynote on September 20th.
That one's going to be
Our
important.
earnings
The
call
September
to discuss
20th
the
keynote.
results of our third quarter of fiscal 2023 is scheduled for Wednesday, November 16th. We will now open the call for questions. Operator, can you assist? Would you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star
This
and
is
the
the part
number
that gets
one
me
on
excited.
your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to one question. Your first question comes from the line of CJ Muse with Evercore ISI. Your line is open.
Yeah, good afternoon. Thank you for taking the question. I think the question we all have is, what is normalized revenues for gaming for you guys? Obviously, this is a challenge for you as well, but curious how you're thinking about it today. Is the fiscal 20 recovery post the first half 19 correction an appropriate framework, or was that inflated by crypto as well? And I guess as part of that, how do we think about the cascading in of the new product cycle? And is there potential for future reserves needed to be taken if gaming does not meet your new updated outlook? Thanks so much.
They're going to say, unfortunately, crypto is too hard to determine for them, so they can't really give us a...
Well, let me start first there and see if I can assist in terms of how to think about after we get through our completion just now of Q2 and what we have provided here for guidance for Q3. Across those two quarters, the Q2 of 23, the Q3 of 23, we have likely undershipped gaming to our end demand significantly. We expect that sell-through, or essentially our end demand for those combined two quarters of Q2 and Q3 to be approximately $5 billion. Now, on top of this, keep in mind that we do have gaming growth drivers to consider for the future. These can include our new gaming product introductions that are around the corner, as well as new segments of the market that we plan to reach with our gaming technology, to just name a couple. I'll turn it over to Jensen to talk a little bit more about that. Now, regarding any further types of write-downs on this perspective, we did a thorough assessment with this quarter, not only just looking at what we needed for this quarter, but what we need for the long term. Keep in mind, our inventory provisions and write-downs that we took into account had to reflect some of the purchasing that we did of supply back more than a year ago, when we were still in extreme supply shortages in almost all of our products. And so this was an opportunity for us to resize, given the macroeconomic conditions, what we needed in terms of supply. So our expectations were higher, and we took this opportunity to write them down to what our current expectations are. I'll turn it over to Jensen to see if he wants to add more.
Yeah, thanks, Colette. CJ, our sell-through is off the highs in the beginning of the year, but it's still very solid. In fact, sell-through has increased 70% since pre-pandemic. And so it's very clear that the fundamentals of gaming are strong, and this medium is really doing well. Not to mention, the gaming platforms are being used, our gaming PCs are being used for influencers, people sharing content, creating content, V-bloggers, VTubers, There's all kinds of new ways of
VinTubers like
engaging
myself.
and spending time with video games. Our strategy is to reduce the sell-in this quarter, next quarter, to let channel inventory correct. Obviously we're off the highs and the macro condition turns sharply worse. And so our first strategy is to reduce sell-in in the next couple of quarters to correct channel inventory. We've also instituted programs to price position our current products to prepare for next generation products. Ampere is the most popular GPU we've ever created. It is in the top 15 most popular gaming GPUs on Steam. And it remains the best GPUs in the world, and it will be very successful for some time. However, we do have exciting new next generation coming, and it's going to be layered on top of that. And so we've done two things. We've reduced sell-in to let channel inventory correct, and we've implemented programs with our partners to price position the products in the channel in preparation for our next generation. All of this, we anticipate we're working towards a path to being in a good shape going into next year. Okay, so that's what our game plan is.
Your next question will
They
come
pretty much
from
have
the
to
line
control
of Vivek
inventory
Arya
right
with
now
Bank
to
of
kind of keep
America
that
Securities.
demand
Your line
strong
is
for the
open.
next products.
Thanks for taking my question. Actually, just wanted to clarify, Jensen. So should we assume that gaming sell-in will kind of stay at these levels into your Q1 or Q2, or depending on new product launch, it might recover? So just wanted to make sure our baseline assumption is set there. And then my question is actually similar on the data center. Sales are pretty strong right now, but there is a concern that data center capex could be the next shoe to drop in this rolling correction in semiconductors. I'm curious, what's your sense of utilization of your data center shipments, and what is the risk that there could be a correction in the data center given
I think that's one of the biggest
caution
fears right now in
expressed by some of the
semiconductor companies
hyperscaler and enterprise customers?
is if data center slows down. And I think that's
Thanks,
what's
Vivek.
creating a lot of volatility in the stocks now.
The sell-through, as I mentioned earlier, of GeForce is solid. The end market gaming demand is solid. It's off the highs, which was really high recently in the beginning of the year, and so because we were building for such a vibrant market, we found ourselves with excess inventory. And so our strategy is to sell in well below the current sell-through levels in the marketplace to give the channel an opportunity to correct. We'll do that for a couple of quarters or so. We believe that by the end of the year, we'll be in a good shape going into next year. And so I hope that answers your question, but the important thing is our sell-in rate is far below what is happening in the market for sell-throughs. The sell-through is solid, has increased 70% since pre-COVID, and so the gaming market is really quite vibrant. On the second question, on data center end markets, we hear fairly broadly that GPU supply is in shortage in the cloud.
I like that. GPU shortage in the cloud.
That demand for GPU rentals far exceeds current supply, and it's fairly sensible to us, partly because the number of use cases for GPUs in the cloud has grown quite a bit. If you look at one particular segment in just collecting data and managing the data of the AV fleet and using that data to train AI models, using that data to reconstruct HD maps, the the usage of GPUs in the cloud for just that one application has grown a lot. And furthermore, there's the deep learning based recommender systems has demonstrated such significant effectiveness, and it helps internet service providers to enhance engagement, enhance click-through rate, and so this particular form of recommender systems is going to really drive a fair amount of data processing and machine learning in the cloud. And then, of course, over the last several years, a very important model has emerged called transformers. You and I have spoken about this model several times in the past, and it's been found that this transformer model, this language model, which when scaled up in size, exhibits really spectacular and effective capabilities to be used to learn skills with either few shots or almost no shot, meaning it could learn skills, it could perform skills that it had never learned because the knowledge was somehow encoded from the large amount of data that it had learned from. And so this large language model area of innovation is used in of course, conversational chat, Q&A summarization, text generation, image generation, but very importantly, it's being used in life sciences for understanding chemistry. We've done some very important work in this area ourselves called Megamobart, understanding proteins, understanding DNA, to learn the language of these large, very, very large, spatially as well as temporally or sequentially types of data. And so the impact of this area is really quite worth staying close to. It's called large language models. I think Stanford did a paper that called it foundation models, AIs. And so we're seeing a great deal of demand for GPUs in the cloud. We were challenged this quarter with a fair amount of supply chain challenges because, as you know, we don't just sell the GPU chip, but these systems are really complex with a large number of chips in the system components that we offer, like HGX. And so kitting, all of the components have to come together for us to be able to deliver the final component. And then furthermore, these data centers sit idle until the last piece comes together. And the last piece includes very complicated switches and very complicated NICs and networkings and cables. And so building these high-performance computing data centers at very large scale for the world's clouds is not particularly easy. And so the supply chain challenges have been somewhat disruptive. But the demand is there. And
yeah, definitely. We talked about those supply chains earlier on this video, where it's not the GPUs, it's some of the other kind of
which is really
equipment needed that's causing it. Here, this is why I believe there's a huge shortage. I mean,
will come from the line of Matt Ramsey with Cowen.
most
Your line is open.
setups need like 8 GPUs, and they only use like 2 CPUs.
Good afternoon. I wanted to follow up on the data center question that Vivek just asked from a couple of angles. I guess, Colette, the first angle being in the release, you guys talked about pulling, high 200 millions of revenue into the July quarter from October, but also with supply chain challenges, maybe some deliveries that were meant for July got pushed back into October. So if you could talk a little bit more about those dynamics and just clarify for us that the October sequentially up data center guidance is actually clean of any pull-ins. And Jensen, the second part, the moving pieces, networking stronger in data center, U.S. hyperscale stronger, China hyperscale weaker. If you could kind of walk us through the trends that you're seeing into the October and January quarters and in those breakouts and clarify for us when you think your H100 will really start to drive revenue. Thanks.
Great. Thanks for the question. And it's kind of a little bit of an add-on to some of the statements that Jensen was discussing regarding our supply chain and what we're seeing today. Our supply chain during the quarter really was quite difficult, was quite challenging to work through. Our platforms, including HDX, networking chips, cables, switches, were very important to the customers. It's not just about us selling the GPUs. So even though customers order components themselves, they're looking from us for what we may refer to as kits that go with those GPUs for them to stand up their data centers. We also experienced supply disruptions internally with our logistics and our component availability. Some of our supply arrived very late in the quarter. We had very little time from a logistics and availability to get those things out. Customers were impacted as well by availability of key third-party other components that we weren't offering, which was slowing down some of their deployments. So what we did in our Q2 orders that couldn't be delivered in Q3, given that some of these supply constraints existed, and we had Q3 demand where we did have supply in Q2. So we worked with customers to optimize that supply and demand, and that's what we've disclosed to you.
Yeah, it does seem like data center is still super strong.
Let me answer the questions about the North American and the China hyperscalers. The Chinese hyperscalers and the Chinese internet companies really slowed down infrastructure investment this year, particularly starting they've been rather slow in building out and really really slowed down in Q2. This slowdown can't last forever, and the number of new technologies and software, the number of people who are using clouds, the number of cloud services is continuing to grow, and so I fully expect investment to return. They're a very important market for us, a very large market for us, and the fact that North American hyperscalers doubled year over year our revenues at the North American hyperscalers, and that was offset by declines in China. It said something about the slowdown in China, and so I don't think that's going to last forever. I think it's going to return.
I mean, if Chinese
with respect to Hopper, we're in full production now, and we're racing to get Hopper to all of the CSPs who are dying to get them, and it goes with our HGXs, which is multiple Hoppers on a system tray. It's really a supercomputer in a motherboard, if you will, and it goes along with it networking gear and switch gear, and so there are just enormous amounts of resources applied from all of the CSPs around the world and ourselves to get Hopper to them. We expect to ship substantial Hoppers in Q4.
Oh yeah, Q4 is. I don't want to call it. Q3 is the bottom.
Your next question will come from the line of Toshiya Hari with Goldman Sachs. Your line is open.
Hi, good afternoon. Thanks so much for taking the question. I had a question regarding the $1.22 billion inventory charge, maybe for Colette on this one specifically. In the CFO commentary, I think you state that the inventory charge is related to weaker demand in both data center and gaming. I think the gaming side is pretty clear based on your comments so far. Curious what's changed on the data center side. Is it mostly the Chinese hyperscalers that Jensen just spoke to, or is there something else going on in terms of how you're thinking about demand in data center over the next couple of quarters? And related to this, curious if the delay in Sapphire Rapids at Intel is having an impact on on your business in the near to medium term?
That's very
Thank you.
important because Intel is going to be using their CPUs here, and they mentioned a
Thanks for the
delay. So I was
question.
wondering how that was going to
Our
affect them.
inventory charges, as we commented, we're taking a thorough look of not only this last quarter as well as the quarter that we're guiding, but looking over the long term of what we need for demand and then what we had in terms of supply. Remember, we had purchased this very early on in the year as we needed to drive the commitments of the supply that we already have. And so
What's going on, Big Buck?
Here for the data center, we had great high expectations. We still have very strong, solid growth projection for data center as well. But we're going to take this opportunity for some of the prior architecture pieces to write down those, given what we see as just a change in terms of our expectations going forward. So you are correct. There are also pieces in there for gaming. We have written down some silicon and chips as the macroeconomic conditions, and we get ready for our future product launches, take into account. But there's also components, services, and capacities, and some of the other drivers that are incorporated in those write-downs.
Our Hopper supports previous generation CPUs, I guess next generation GPUs, CPUs, Sapphire Rapids and Genoa after that, as well as Gravitons. So we certify and test across all of the CPUs because the cloud service providers demand it, and they intend to deploy NVIDIA accelerators and NVIDIA Hoppers across a large number of CPUs. There is no question that the delay is disruptive, and a lot of engineers have to scramble. It would have been a lot easier if next generation CPUs were to have executed more perfectly.
If there wasn't a reason
However,
to hate Intel anymore, they messed up my favorite
with
company.
CSPs where they connect our PCI Express connectors to current generation CPUs as well. And so it, nobody likes the delay. The next generation CPUs will trigger a refresh of infrastructure and new servers, and so I'm super excited about them. However, we're going to be able to go to market plenty fine with Hopper supporting existing infrastructure.
Your next question will come from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question, and a lot of it's kind of been talked a little bit about, but I just, Colette, I want to think about the numbers a little bit more. I guess based on the guidance commentary, where I would come up thinking about would be is like a 30+% sequential decline in gaming and professional visualization, and maybe kind of low to mid-single digit growth in data center and auto. So I guess, is that the right context? And with that, and with Hopper coming down the pipeline, we're going to have a lot of questions around kind of the deceleration of year-over-year growth in data center, I believe. Do you think that Hopper, as that comes fully available, it sounds like in fiscal 4Q, that you actually see data center growth re-accelerate as that product cycle materializes?
Yeah, thanks for the question, and that's a pretty good understanding of our guidance. And we do expect, yes, gaming to decrease, not in the dollar amount that it decreased between Q1 and Q2. So that may be of our two areas of decline, our gaming and Pro Viz. That may be about 3/4 of it associated with that gaming. And then professional visualization would probably be about 1/4 of the two areas that will decline. Our data center,
Overall,
earnings
Big Buck?
expected to grow. It may grow about what we just saw between Q1 and Q2. We'll continue to look at it. There may be some more opportunity there. And automotive, very similar to our thoughts at the very beginning of the quarter. We are expecting continued growth through each of the quarters of this fiscal year. And we felt that Q2 was an inflection point. So we'll continue to grow into Q3 and hopefully Q4 going forward. I'll turn it over to Jensen to see his thoughts in terms of Hopper, what Hopper brings to us in Q4 and expectations.
I think quarter three is going to be a dead quarter for NVIDIA. Quarter four is where it's going to be at.
We're selling far below the market demand, far below the market sell-through. And the reason for that is to allow the inventory, the channel inventory, and the OEM inventories to correct. And this allows us to prepare for our next generation. And our next generation has Hopper for compute, but we also have a next generation for computer graphics that will be coming to market. Hopper is a giant new generation because it is designed to perform this new type of AI model called transformers. Has an engine inside it called transformer engine with numerical formats and pipelines that allows us to do a spectacular job on transformer type of models, which includes large language models, but it also includes computer vision models that are now able to be processed with this new type of AI model called transformers. And so I fully expect Hopper to be the next springboard for future growth, and the importance of this new model transformers can't possibly be understated and can't be overstated. This is the impact of this model across robotics, computer vision, languages, biology, chemistry, drug design. Is just really quite spectacular, and I'm sure that you've been hearing about this new breakthrough in AI, and Hopper was designed for this.
Your next question will come from the line of Atif Malik with Citi. Your line is open.
Hi, thank you for taking my question. Colette, can you talk about networking versus compute? Were they both supply constrained in the July quarter, and are they both sequentially growing in the October quarter?
So within our Q2 results, we have been continuing to improve our supply for networking. We have a lot of important products that the CSP needs, many of our customers need, and we have been working to really improve that supply. And we were able to set very strong growth in terms of networking, both sequentially and year over year. And as we move into the next quarter, we're going to have to see which is going to be growth larger. We're just going to have to take a look once we finish that quarter. But our supply for our compute is here, but as we've discussed, sometimes it's important that they have many of our other components that we provide in networking at the same time that we are providing the GPUs. So sometimes those are very important for us to deliver together. So we always have to keep that in mind. So it's not always a supply constraint, but there are certain parts of it that are.
Your next question will come from the line of Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wanted to ask, why did the supply constraints hit you guys so hard this quarter? I mean, you've done such a great job the last couple of years outgrowing really everybody in a very challenging supply chain environment. It hasn't tripped you up at all, and it seems like now it's kind of hitting you fairly hard at a time when in other cases it's kind of easing. So I'm just kind of curious, what is it about the timing, and how long does it sort of take? Is that a Hopper issue? Is it related to other components? As you talked about, how long does it take to clear those issues up? Thank you.
I think it's just companies just being more mindful of where they're spending their money, so they'd rather just wait for everything to be in line for them to
see if Jensen
buy everything.
Wants to add on to it. Our execution has absolutely been phenomenal. When we think about the challenges of we're almost putting together a full data center for our customers and getting it shipped out. So we're no different in the same way that the CSPs are challenging with setting up their data centers, as we're such an integral part of that. And so networking has been short of supply. These are the same supply issues that some of our CSPs are having. So our supply arrived a little bit late in the quarter for some of our key products that we needed to get out. And putting that together caused some disruption in our logistics and distribution. We were pleased in terms of reaching the levels of networking that we did, but we did have some challenges this quarter.
Jensen doesn't want to talk today.
Your next question will come from the line of Stacy Rasgon with Bernstein. Your line is open.
Hi, guys. Thanks for taking my question. I wanted to go back to that data center inventory charge. You listed data center first when you talked primarily related to data center and gaming. Can you give us a feeling for how much of that charge was data center versus gaming? And then to follow up on that, it did sound like to me that it was mostly Ampere and not Hopper change in expectations. Can you verify that or clarify it? And just talk about what's happened with your expectations for Hopper. Have they gone up or down, or has there been any change at all relevant to that inventory charge?
I like this question. This is good.
Regarding our inventory charges that we had, when you think about what we have in supply, whether it be chips, components, whether it be memory, remember, a lot of these things can be used interchangeably across the two. Additionally, the value of our inventory for data center is much different than the value of what we have for gaming from an overall cost perspective. So we're creating capacity opportunities, putting together all of those systems in terms of data center. It is prior architectures. Absolutely, this is not a question regarding anything of our future products coming to market. Nothing on the inventory provisions has to do with that. So we took this as looking at the macroeconomic conditions as we've discussed. Our expectations, our plans were higher. They're still quite solid that we see in demand both for gaming as well as solid for data center, and that will continue. But we did have to just take a right sizing of that inventory.
Was designed for transformers. New transformers was going to be important. Nobody could have predicted the profound importance of large language models. Large language models, excitement, innovation, ideas, companies, startups, industries, all exceeding everyone's expectations. I don't think anybody could have predicted the impact of transformers as it scaled up to these giant sizes. There's a fair amount of literature now written about language models that were small-ish in the old days, in the beginning, several years ago, 3 years ago, and the ones that are in the hundreds of billions and moving towards probably several trillion parameters. The effectiveness of the AI is really quite spectacular, and to have AI that was never trained on a particular skill, and yet within one shot of trying or even no shots are able to perform that skill is beyond anybody's expectations, I would think. And so I think if the success of Hopper reflects the amount of work and pent-up demand for large training systems that Hopper's going to go into. If that's an indicator, I think Hopper's going to be a spectacular success.
Your next question will come from the line of Srini Pajjuri with SMBC Nikko. Your line is open.
Thank you. I have a question on gross margins, Colette. The 65% non-GAAP number you're guiding to, does that include or assume any additional write-offs on the inventory front? And then just to expand on that, your mix is probably a tailwind to gross margins, given that gaming is down significantly and data center is up a little bit. And I'm just wondering, are there any other offsets? Because I would have thought gross margins could actually be better than your longer-term model because of the mixed tailwinds. Thank you.
Yeah, thanks for the question. So our gross margins outside of the inventory charges in Q2 as well as going into Q3 is really about our sales mix that we have. And probably also to understand that our sales mix in the next quarter for GPUs is not in the high end. And so that has impacted our gross margins as we move into Q3.
Yeah, we're still in older products, so gross margins are
still
still lower.
expect that data center will assist in our gross margins, but we also have growth planned in auto. Auto is below our company average, and so that will tend to offset some of those upper bound things that we will see in terms of data center.
Didn't know about that about auto, so good to know.
There's a small amount of scraps that we will have in our gross margin estimates. So nothing material is planned, but there is small scraps that may occur from quarter to quarter that are included in our gross margins.
Your next question will come from the line of Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Colette, I had a clarification and then a question. So my clarification is whether October gross margins are benefiting at all from the sale of previously written down inventory. And then my question is whether you can give us the enterprise cloud split in data center, because it sounds like the mix shifted more toward enterprise in July. And I think investors might want to see that as risky in the face of enterprise, clearly slowing. So I'm wondering if you can give us that. Thanks.
Okay. No, there's nothing in our Q3 regarding those inventory provisions that we took in terms of earning that back in terms of our Q3. Regarding our split between our hyperscales and data centers and what we refer to as our vertical industries, they always tend to be about the same, 50% for one, 50% for the others. They're still in about that range. We had discussed that our China hyperscales did not drive growth in terms of sequentially here, and so that did influence in terms of the hyperscales, but still we are approximately...
No, Peter, I look at my portfolio every day, but mainly because I have to when I look at news.
Your next question will come from the line of Harlan Sur with JP Morgan. Your line is open.
Good afternoon. Thanks for taking my question. On the weakness in ProViz, this is an enterprise-focused business, right? Granted, it's a somewhat narrow vertical market, but it does sort of play into the market concerns that consumer is weak now, enterprise is the next shoe to drop. So is the decline in ProViz attributed to enterprise spending weakness, or is it some other dynamic? And why or why not is this not a leading indicator for your enterprise and vertical industry segments within your data center business?
Because ProViz CPUs, GPUs were also used for crypto mining, so can't really
our
correlate.
visualization business, just in such a short time, they were in short supply and really trying to feed so much of the industry's desire to both refresh and attract it to the new RTX workstations that were there. We were fueling both mobile as well as desktops for that market and growing quite nicely. Remember, all of last year doubled the size of ProViz in 1 year. So right now, the OEMs are concentrating on their levels of inventory, want to make sure that they can get through that inventory. But keep in mind, very similar to our discussion on gaming, there is still solid demand. There is still solid demand. We just have to correct some of the inventory but we still see both the opportunities that we've created for the market for these to be longstanding. And your second question, remind me again?
Whether the broader enterprise market is going to be, the verticals are going to be affected by that. I would say, first of all, we don't know. Second of all, unlike our workstation business, our ProViz business, there's no installed base. Most of the ProViz sales tend to be upgrades or replacements from something that has our installed base of 3 or 4 or 5 years that people, whatever upgrade cycle they happen to have. And so in the case of ProViz, the companies that are buying ProViz are ProViz systems likely already have systems that they've been using. And so if they were to tighten up ProViz for whatever reason, people could continue to use what they have. In the case of our AI business, there's no real install base. These are all brand new things that people are growing into, and the productivity benefits or the cost savings benefits of using autonomous systems is fairly profound. And it's not so much that the demand isn't out there.
That's a hard question, Doctor. I would say maybe somewhere around
would like to save more money,
130,
like
140.
Faster. It's just that AI's understanding and AI's use is still spreading, and so we're delighted by the rate of growth and the rate of adoption of enterprise. My sense is that our AI business and our ProViz business have very different characteristics for that reason. But what Colette said earlier is about our ProViz businesses last quarter is absolutely true, which is OEMs realizing that the end market is slowing and taking the opportunity to correct their inventory.
Your final question will come from the line of Ross Seymour.
Finally, my wife is angry. She wants to go eat dinner.
Hey guys, thanks for letting me ask a question. I just had a longer term question about once your gaming business normalizes, with the absence of crypto in a general sense and with the merge coming, et cetera, how do you view the pricing environment? I know you guys really weren't raising prices like we saw in the MSRP premiums in the aftermarket, but generally your mix was quite rich over the last year or two. You're going to have Lovelace coming in. That'll obviously help the mix sequentially versus the last couple quarters. But how do you think about it normalizing? It's that $2.5 billion per quarter sell-through rate comes. Is the ASP mix across your stack about the same, or does it go down because of the absence of that crypto tightening dynamic?
I would say that without crypto dynamic, the mix would go down. However, the overall trend long term, the ASP is drifting up. And the way to think about that is a game console. My first game console was $99. Lately, game consoles are selling for about $599, and the reason for that is because it's more useful than ever. You use your game console for your greatest form of entertainment, and you use it for a very, very long time. And GeForce essentially is a game console inside your PC, and we've always believed that the ASP of GeForce should drift towards the average selling price of a game console, and so it should be something along the lines of $500 or so, roughly at this time. We also have GeForce in the cloud, and because GeForce in the cloud is hosting many gamers simultaneously, it tends to want to be a much more powerful GeForce, and so our cloud gaming GeForce tends to be, our cloud gaming graphics tends to be much higher end, and then of course there's the design aspect of it. Most designers and most creators are able to use GeForce these days, and they use their PC to create content, and much of that content goes into video games, or they're using video games to create their artistic content, and so the GeForce is not just for gaming for them. The GeForce is essentially their creative workstation as well. And so there are several dynamics that are causing the ASP of GeForce to go up, and we've been seeing this trend for several years now.
Thank you. I will now turn the call back over to Jensen for closing remarks.
Thanks, everyone. Navigating our supply chain transitions in a challenging macro environment. In gaming, our partners and ecosystem are responding to a sudden slowdown in consumer demand and correcting channel inventory. Still, the fundamentals of gaming are strong. We'll get through this over the next few months and go into next year with our new architecture. I look forward to telling you more about it at GTC next month. In data center, AI, where computers are helping us write software that was impossible before, is driving a computing revolution and transforming every industry. NVIDIA's leadership in full stack, data center scale, accelerated computing has made us the ideal partner for companies racing to leverage the power of AI. Even with the current macroeconomic headwinds, demand for our data center products have never been stronger. The next wave of computing is coming. With AI and 3D graphics advances, developers will extend the internet with virtual world overlays that connect to the physical world. This next evolution of the internet is called metaverse. We created Omniverse to connect the digital and physical world and be an open platform for creating and operating metaverse applications. The immediate applications for Omniverse span product design, manufacturing, and operations. Omniverse is off to a great start. Our automotive revenue is inflecting, and we expect it to be our next billion-dollar business. Autonomous driving is one of the biggest challenges AI can solve, and computing opportunity for us spans the data center to the car. Autonomous driving will transform the auto industry into a tech industry. Automotive is one of the first to transform into a software-defined tech industry, but all industries will be. We're building NVIDIA AI and NVIDIA Omniverse to be the engines for the world's enterprise to become software-defined, AI-powered technology companies. I look forward to next month's GTC conference, where we will share new advances of RTX reinventing 3D graphics and gaming, AI's continuing breakthroughs, and building the metaverse, the next evolution of the internet. So join us. We look forward to updating you on our progress next quarter. Thank you.
All right.
This concludes today's conference call. You may now disconnect.
Before I head out, just want to take a quick recap of what I kind of saw during earnings. So obviously, gaming market pretty slowed down. Not too many surprise, right? I know him, for example, with things like with the merge and just the overall crypto slowdown. The gaming market was expected to see a huge drop. We saw that, and it's going to proceed for the upcoming quarter. In the data center market, we did see that nice year-over-year growth, but not much quarter-over-quarter growth. They do mention a nice amount of that is due to that supply chain issues, supply chain constraints, where maybe a company, some of the equipment is not fully there. So companies right now are being a little bit more mindful and just waiting for everything to kind of be available before they kind of complete the purchase. At the end of the day, they are seeing a bit of a slowdown from cloud service providers in China, but they don't expect that to last long. I mean, especially like, let's say you are a Baidu or Alibaba or whoever are their cloud service providers. If you stop investing in new products or in new technology, your competitor is just going to grab the new product and provide better solutions. So that's the reasoning for why they believe in the upcoming quarters, China is going to regain back in form of kind of being a strong customer for them in the data center market. They're still seeing strong growth here in North America, which is pretty good. So for me, data center market will continue to, maybe we're going to see a nice growth in quarter 3, but I do believe quarter 4, like they mentioned, due to Hopper architecture and all the Hopper solutions, is going to be even a stronger quarter for them. So for me, I do believe the upcoming quarter will be a dead quarter for them to some extent. We are going to see a slowdown in the gaming market. Like he mentioned, later in September they are going to have their conference, their GTC conference, which they're going to explain or kind of release the new products for the consumer market. I do believe that's going to help out a little bit in the gaming side. But like they mentioned, I do believe ASP, average selling prices for GPUs, might not be as high compared to a year ago, but we might still see them a little bit higher than a few years ago, just because technology continues to get more expensive. So it does seem like a huge driver is obviously the data center gaming market. Once they release the new products, we might have a little bit more information there. The automotive market obviously hit that inflection point. They do believe it will eventually be a $1 billion run rate for them. Very similar to what I think. They barely talked about the Grace CPU, which is still expected to be released in the first half of 2023. So I'm super excited for Grace, especially it being an ARM CPU, which might let it be a stronger kind of product, because a lot of data centers right now are experiencing a bit of a energy problem to some extent, and ARM architecture tends to be a little bit better for power efficiency, so that might provide a strong growth for Nvidia there. What else do we see? At the end of the day, like I said, bad quarter this quarter, definitely not the best quarter. Next quarter will be a dead quarter. At the end of the day, I don't think it's anything bad on their end. It's just the overall everything that's happening in the market right now. Long term, super bullish for Nvidia, no doubt about it. So I hope you guys enjoyed the stream. I hope you guys enjoy all the kind of semiconductor talks I've been doing, and I appreciate all the support from everybody. My wife is hungry. I'm hungry, so I'm gonna go eat. Take care, guys. Have a good day. And remember, long-term investing, we shouldn't really worry about how our portfolio is now, even though it sucks, right? It definitely sucks to see our accounts down. In the long term of things, I believe in the next 5 years, we're not even going to remember that our portfolio was down during this time. So take care, guys. Have a good day, and see you next time.